M1 has been really good for me. I got rid of a couple episodes ago. I talked about how I got rid of all of Coinbase. Um, I sold a lot of my crypto because this one was a little bit more stable. It was very consistent in how much I was making. It was very consistent in being just user friendly, simple, easy, something that other people can follow along with. What is up, everybody, and welcome back to YBI, where we discuss opinions and strategies on how to better your financial selves. It's Zion and Roman back in the building. What's up? What's up? What's up?
What's good? And for anyone that's going to decide who's seeing these videos back to back, we recorded these episodes back to back. That's why I'm wearing the same shirt. I don't even care. I'm just letting y'all know.
Oh, I changed. Oh.
Yeah, you did, but it's fine. I'm just letting the people know that some people didn't think that I was just dirty or something. I just didn't.
Oh, you dirty. It's fine. You dirty.
I just wanted to make sure. Okay. All right, guys. What are we doing?
We are talking about quarter one for M1.
Yes, our first quarter of tracking for the fiscal year of 2021. We are in the second quarter of the year, but we are showing our first quarter's performance from then. And typically what I tend to do around the times of when the quarter ends and such like that, to show you guys basically how to stay on top of your portfolio and make sure that it stays in line and in balance. So first I'm gonna end up popping up. Let's see. Let me go here.
Mine first. I want to go first.
Want to do yours? Okay, let me make you the host then. Since I want to be first. I want to be first.
I want to go first.
Bam.
All right. So screen share. There it is. So mine is the more realistic of the two, which is why I'm going first, because Roman decides that he wants to have thousands of dollars and flex on the world.
But no. Where's put 1 quarter? Yeah, there you go. Yeah, there it is.
Yeah. So this is quarter one. If you have been following along with M1, as you should be, because as we've talked, this is free money. This is better than your savings account, blah, blah, blah. Go on. Watch the old videos of M1 because M1 is lit. There's also links in the description below how you can get a little bit of free money.
Like, share, subscribe.
Yes, all that stuff. We got all that out of the way. M1, quarter one, this is where we're at. My current value is 512 American dollars with 17 Canadian cents.
17 Canadian cents.
So this is where we're at. Roman, you gonna walk us through this? Because I just put my in here. That's what happens.
Oh, about what you got going on. So basically his overall gain is 4.18%. Over his whole quarter. His market gains about $12. His dividends in there are about $2 in there. So it's definitely getting more market gain than dividends, but it's fine. Dividends are extra money that's going to compound in there, and that's great. Scroll down there for them. So you have bonds thrown in there too for a little bit extra too, out of everything. Yeah, well, that's actually about everything's pretty much even. Everything pretty much tracks out for what that portfolio should do. The one that's set for this one is definitely be more long-term, steady gains. Everything's really on track. Global growth, seeing the biggest growth kind of makes the most sense just because the entire global, well, not the entire, but a good portion of some of the global market has kind of been shooting up there. MJ is, I've always said around the channel, I've always been bullish on the cannabis industry and everything on it. And that's up about already almost 5% for him for this quarter. There's a few states that have pretty much passed either new rights and things like that, and a couple other countries now that have been starting releasing things. So forever, I want to say long term, I'm thinking it's going to be awesome. Bond yields are pretty much been steady. The interest rates in America have not really changed. So they're not really going to do much. I'm still going to keep some bonds in my portfolio. I don't have them as much as I usually have, even in the YBI pot as shown here, but I still like to keep them there because they are still somewhat of a steady rate of return. Still overall up 4%, about on par with the rest of his portfolio is still up there as well. So not bad at all. All in all, it's still doing better than your pretty much your best savings account. Even the highest one I have right now through a CD is 0.75. So that's not to say, I've seen some people still getting up to like 1% or something around there in some CDs or some places, but to still be able to put your money somewhere and earn 4% of it, that's great.
Okay. So for
Market
everybody
forecast.
again that is following along with this,
Oh, and then go to your month. Go to your month real quick. Let's see how your performance about just for the month has been. So 0.45, pretty much flat across. Nothing too crazy.
it's just addition of funds.
Yes, and the
Um,
reason definitely probably for that is I'm not gonna lie, it's from your earned dividends. Most of your dividends got earned within the past month. And that's really just gonna come just because it's the end of the quarter and stocks will usually go down by as much of dividends that they pay out, but then that'll level out because most times those dividends get reinvested and the stock investors get excited when dividends go out, so the price tends to go up. So usually that levels out, but that's just normal market fluctuation such.
so if you're watching this right after the last M1 video that we did, you can see that I did not add that much money. Why? One, I went on vacation, so I wanted to add more money. Two, I forgot. I'm not gonna hold you. I forgot.
He
I
did not
took this
hold strong to his investment strategy.
false. What I did was forget because I had the savings account that was, I there's only so many transactions I can do, so I had to turn that off. So then I was putting money into this, and then I forgot to put into this, and I went on vacation. So yeah, I'm gonna add more money to this, and the next time you guys will see a little bit more. But if you are following along with this investment strategy, you should probably have, I don't know, $50, $100 more than I do, which is totally fine. I'll catch up. Don't you worry. I
Yeah.
might do that right now. So let's talk about this whole rebalance process. Is that something that we need to
Yeah.
do or we
So
are concerned with?
So definitely, especially when it comes to M1, it's meant to be a balanced portfolio. So whenever you see things in this case where one of your slices is really overweight, I usually like to do it by every quarter. I'll do a rebalance. When it comes to newer accounts, in some cases, I may not do a rebalance to the very end of the year, just because you only kind of it shows one buying and selling at one time. And yeah, like that amount of like for where you're at and the profits you're going to be at, you won't have to pay any taxes on. So you'll be fine in there no matter what. But you have to report that, of course, on the IRS when you do your taxes. Get some tax help when you do that. But for that there, yeah, I would say definitely a rebalance is in order there, even on my portfolio, and there's not that much change in a lot of them. I would say a rebalance is due just because it keeps things nice and right. And you go into the next quarter pretty much being fully fresh and ready to go. I keep playing my wallet. I'm sorry, y'all. But it puts you in you basically like, you're going off the bench, you're going in a fresh quarter, ready to go. The market tends to usually have some sort of, this is weird. This quarter, we're actually kind of ending it on record highs. Normally at the end of a quarter, you might see a little bit of a downturn in the market just because the quarter's ending, earning reports have come out, things of that nature. But this market's actually been fairly strong. So rebalance won't do much, but just sell off the shares that you're overweight on. So if whatever your portfolio is doing really good on right now, some of that will sell off and reinvest that money in some of your underweight shares just to balance it off and give you a fresh mindset in there. And especially if you are using M1, it's more of a long-term play. You want that money to be very diversified and to ride any current wave or fluctuation in the market when one does come. Now, I am putting the full spreadsheet of the portfolio in like a Google spreadsheet for you guys. It's just a lot of stocks and a lot of stuff that goes in there. So once you do that, you can use the portfolio or any type of one on any type of brokerage app and kind of, use different strategies in that way to kind of diversify it. But that would be a nice way to do it. So let me do this. This is mine currently sitting on the quarter for the last few months. Right here, you actually can see what I'm about to show you guys here soon is like a sell-off I usually do at the end of the quarter to take some of the profit that's earned there and then reinvest that back into the portfolio to basically reuse that money. I do that in both my IRA and in my main kind of portfolio just because it'll end up rebalancing itself through the end because that money gets reinvested and I don't really have to pay much taxes on it. Within 1 month, I'm sitting around a 1% gain. And then for the quarter, around 6%. Biggest gainers, who's the biggest gainer here? The overall S&P 500. That has been my biggest performer overall.
Energy.
Actually, no, energy.
Energy.
No, technology and real estate. I didn't even see this. That makes sense. Both of those two actually make great sense. Everyone knows about the real estate market. Those prices have been insane. People are over leveraged, not even really over leveraging, but are asking 20 or 30% above market prices. Everything in that market has been pretty high. Tech, it's just been tech. The way tech's been for the past year, it's just always been performing really well. Financials are doing pretty good. Energy is doing really nice. My dividend balancer portion, what is a collection of a couple ETFs in there. overall not doing bad. CHL that I can't get rid of. Travel, I can still see him being down just because Southwest is mostly Southwest and Delta. They're still rebounding from just the pandemic. So those, I don't really see that doing well until probably next year or so.
I'm probably
But
about to buy for that.
yeah, just over the long term, just travel will bounce back. Everything there will. And I'm gonna do we're gonna do an episode here soon on about the different sectors, because this portfolio is meant to just pretty much mimic the different sectors of the stock market, from real estate to industrials, technology, communication, financials, healthcare, energy, consumer defensive, dividend balancer is one I just made, but utilities and then cyclicals and materials and travel. And then I put in some other kind of like the small cap is like the Russell, the mid cap is your mid cap company, just so I can get a little bit of everything in the world, diversification. Bam. So in here right now, I'm not really overweight. I'm underweight a couple of things, overweight in some, but we'll do a rebalance. Or actually, do I want to? Yeah, I'll do a rebalance first. No, I'm trying to think. How do I usually do this? Do I usually sell profits first or do a rebalance first? No, or do a rebalance first. Rebalance. Bam. And it'll show there pretty much what it'll do between it'll sell this portion of these three companies and reinvest that in all of these companies, that just to balance off the entire portfolio there for me. And that's rebalance. It's really dope. It just makes sure everything is really nice for you to do. And usually here, what I'll end up doing is I may not be able to sell now until the rebalance is done. Yeah, it won't let me sell until the rebalance is done. But once the rebalance is done, I will sell off the 390. I'll probably just round it off to 391 or 390. I'll sell that off. That goes into my cash balance, and then I'll reinvest that into the portfolio overall. And then there you go. You have a new rebalanced portfolio ready for the next quarter. And by that point, it'll probably show, once I sell that gain off, it'll show my current value automatically go up to like $800. And that's just from selling off the profits there. And I put that money directly back into the portfolio. So that's just a good way to basically have compounded interest. And yeah, multiply.
Mm-hmm. I'm about to do the same thing. That's literally what I'm doing right now. But I'm also trying to add travel into mine.
Yeah, and there's and some yeah, it would just be some slices like that. And M1 does have their own kind of pies that they make, but the ones that I have there are ones that I made myself up in companies I picked from all the different sectors. And you can pick whichever ones. Of course, a lot of mine are more aristocratic, more long-term dividend ones, but there are some that have suspended their dividend that I still have in there just because they're long-term growth stocks, and I know they're going to perform well. If they don't, then I remove them.
Yeah, so that is where we're at after one
M1.
quarter of following M1. M1 has been really good for me. I got rid of a couple episodes ago. I talked about how I got rid of all of Coinbase. Um, I sold a lot of my crypto because this one was a little bit more stable. It was very consistent in how much I was making. It was very consistent in being just user friendly, simple, easy, something that other people can follow along with. So I'm advocating for M1 quite heavily here, especially for new people. If you're worried about what this is going to look like, how to do it, follow along with these videos. Pull them up on YouTube, put them right next to you, and you can literally create a M1 account from start to finish, and you can start seeing some of the gains that Roman and I have. I'm about to do the exact same thing, sell up all my gains, reinvest it, and we're gonna be making money.
And then,
All
then you
right.
pop it in there. And then I did look at, I was like, what could I even do with the 3 months? Because of course mine, what I'm making is enough to like live off of, even at what I have in my portfolio. But even then I was like 390 over 3 months, that's $130 a month just in earned income from that, or earned value. That's enough to pay phone bill or utilities for some families. That's 3 months of utilities or something like that. And that's just from having even that amount of money in there, which for a lot of families is about maybe about three months of savings and sometimes in there. But just like that, you can have almost passive income that could have been paying your bills right then and there for you that you could use. So it's something like that, and that money starts to grow. And it's just right then and there in your faces, guys. Anybody can do it. We can do it.
Yes.
You can do it.
We ain't nobody. Y'all can do it. It's easy money. Um, I think that is going to effectively wrap up this episode. Again, thank you guys so much for watching. Like, share, subscribe. If you guys are into this content, let us know. Even if you're not into this content, let us know. But you should be into this content anyway. We are out of here, guys. As always, we may be young and we may even be broke, but we are always investing. Thank you, guys. Till next time. Peace.
Peace. Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the hosts. They're not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody, and have fun and be safe.